And welcome back to CoinGeek Live. We're continuing the conversation about how Bitcoin SV will lead the world to one chain dominating our entire digital ecosystem. As part of that, we're expecting transaction volumes to increase continually on the Bitcoin SV blockchain. And that's leading to a new economy where what we know are blockchain miners will become transaction processors. To have a presentation on this, please welcome to our London virtual stage the CEO of Tall Distributed Information Technologies, Jerry Chan.
Thanks, Jimmy. Thanks, everybody, for joining us today. Today, I'd like to talk a little bit about what TAL is and what we do. And as Jimmy mentioned, what is this whole notion of transaction processors versus miners, et cetera. First off, TAL is a publicly traded company. We're traded on the Canadian Securities Exchange, the Frankfurt Exchange, and also the OTC market in New York, and under the stock tickers you might see in the presentation here. First off, I'd like to start with a quote, and this is actually a quote that Jimmy said in the beginning of this conference, but it's important enough that it's worth repeating. This was a quote that initially inspired me and gave me the confidence that Bitcoin as a technology can reach global scale. And therefore, everything that we're doing now in building this ecosystem and building this new economy is not in vain. And that quote is that the Bitcoin, as it was back in 2009, was already capable of beating Visa in terms of number of transactions per second. Now, that was 2009. So what have we done in the last 10 years? Well, this is another quote, not by someone as famous, but what I'd like to think of this is that we've been actually pursuing an incorrect business model, we as in miners, for the last 10 years. And we have to go about breaking down this old mentality of what miners were and what they were doing and how they would be incentivized and generate revenue. And the incorrect model up to this point was that miners, as infrastructure providers for the network, for the ecosystem, was to make revenue from the tokens or the block rewards. We have to change this model now to something which is based more on the utility value of Bitcoin as opposed to just the speculative value. So we have to start by breaking down these old assumptions. Now, what is the end goal of Bitcoin then? What will Bitcoin look like in its end state? For this, I'd like to draw your attention to something that was, inspired me from a person by the name of George Gilder. You'll probably hear from him later in this conference. And he actually came up with this notion in a series of books where there was a cosm. The first was the microcosm, and then followed with telecosm. These series of cosms was a fundamental tectonic shift in technology which brought about an entire new industry. Firstly, the microcosm, which was talking about the advent of personal computers and the microchip and the integrated circuit, and how it brought about the empires of Intel and IBM and AMD. The second book, Telecosm, spoke more about the world after bandwidth became wildly abundant. And this was what really drove the adoption of the internet as a commercial venture. And this brought about the giant companies such as Cisco, Amazon, and Google, which we know today, and to also an extent Facebook and Twitter. And this was the telecosm, which was that bandwidth shift, the fact that we have pretty much unbounded bandwidth growth. Now, what we think, and what I think Bitcoin it promises, is the final move to something I like to coin the data cosm. And the data cosm is this new data-driven economy, where data ownership is something that's real and tangible in the virtual world, and that being able to sell and exchange your data becomes the basis of this new economy. And for those of you who know that icon there, we're going to talk a little bit more about what that sort of diagram is. And because it's very fundamental in what we're doing at TAL. That diagram is known as, well, many different names, but it's effectively what the Bitcoin network looks like. It's, I think, inspired by the Mandela networks. And effectively, Bitcoin is really not a mesh network. It's a layered network. And in the core of that layer, we have these nodes. And those nodes are the miners. Now, up to this point in time, those miners have only been funding themselves by hashing and producing blocks and then making rewards in Bitcoins. But of course, this is a speculative venture, and this will drive miners to compete with each other and who can generate the most hash to generate the most blocks, all to grab these tokens, which don't really have a real fundamental utility value yet. And that's where we see the problem. And at TAL, we want to be the first to change that model to something more sustainable in the long run, where we're thinking about the world and the economy after block subsidies or block rewards become zero. And how are miners or infrastructure providers supposed to sustain themselves? Well, our answer is that we have to transform our business to be not just mining or hashing, but to be transaction processors. And so that's basically the diagram you see there, which I'll explain a little bit later. As part of this transformation, we see our revenue streams as basically generally falling under 5 categories, all of them based on the Bitcoin SV blockchain. Now, the first 2 you see on top of the foundation of Bitcoin SV blockchain in blue is hashing, managed services, and transaction processing. Those are businesses which we are engaged in at this presently, and we're moving up the pyramid, so to speak. And we'll talk more about our transaction processing focus later in my presentation. But in the context of this data cosm, this future data-driven economy that we see, the more interesting blockchain-specific businesses is going to be based on data storage, data serving, blockchain compute, which is something that I think Craig spoke about earlier in his presentation yesterday. And finally, the Internet of Things and specific blockchain hardware, which will facilitate a machine-to-machine economy, all based on in this notion of a data-driven ecosystem or the data cosm. Currently, TAL's revenue stream on the left looks very much based and focused on hashing operations because we were a traditional miner. But part of our 5-year roadmap will see us evolve into a transaction processor which has a more diversified set of platforms and services, which we foresee about 30%, around 30% of each being based on data storage, transaction processing, blockchain compute. While we still have to maintain some amount of hardware and hashing, we believe that that is going to be a smaller, much smaller part of our revenues. This all goes back to the urgency that we see for all miners in the industry, all public blockchains anyway, which is the fact that if we do not support driving transactional volume exponentially, we will all be out of business in a couple of years. And so in the chart we have here, you see on the left side, the degrading block subsidies that was programmed into the original Bitcoin protocol, and it's unchangeable. And overlaid on top of that is where we see the need for transactions to compensate for the degradation of block subsidies. And we predict that if the crossover point doesn't happen in the next 1 or 2 years, then the entire blockchain experiment is in dire straits. So we are all about driving volume, transactional volume on native Bitcoin, BSV, and everything to do with processing and facilitating this increase in volume. This is good news because if we think about transaction processing, mostly everything that we do on the internet is a transaction. Not only just payments, but we're talking about things like notarizing, escrowing, events, logging, as we've seen in the other presentations today, data tracking, and all of these things are transactions. In fact, every time you log into any sort of secure website, there's a token involved and there's a transaction involved. Now, if we move to a world where we have interchangeability of these tokens or interchangeability of all these transactions and a global ledger of all of them, then we are talking about a total addressable market that's in the trillions. I mean, at the small end, it's a couple of hundred billions. And this is even just talking about blockchain compute services and blockchain and data services, data storage. But payments itself is about $3 trillion. So this is a huge, huge addressable market. And we believe that if we even just capture a small percentage of this, I think that is plenty enough for us to be very successful and profitable. Now, this slide is explaining a bit about the viability of this whole data and health data services application. And I think the previous presentation already covered this in great detail. So I don't need to reiterate again the importance of this business, because we are on the tip of the iceberg of the amount of real-world business applications that can be addressed with a public blockchain. And so things like, I think EHR Data mentioned in their presentation, they have the potential of, for instance, if we talk about prescriptions, there's inwards of over 4 billion prescriptions, opioid prescriptions alone in a year. And if all of those were recorded on the blockchain, then we're talking about billions of transactions. Now, billions of transactions, given the current business model of transaction processors or miners, has one problem for businesses. If you are going to put 4 billion transactions on the blockchain, and all of them, given some assumptions of current price and given the assumptions of a transaction size, let's say that's going to cost you about $1.5 million a year, right? That's not so bad. But if you're paying this cost for transaction processing in Bitcoins, then of course you are now subject to the exchange rate of Bitcoins versus US dollar or whatever your home currency is for your business. So that's a problem that real enterprises need to struggle with. And that's where we at TAL want to offer, as part of our enterprise solution and enterprise blockchain infrastructure solution services, we are extending our platform, the MAPI platform, which is the same MAPI that you've heard in other presentations in this conference, which is our API that we will provide to businesses so that they can give us their transactions, and we will be responsible for putting them on the blockchain. Now, you get two really important things when you have a public, transparent company that is going to stand as a counterparty in a contract for transaction processing. One, you have this accountability, right, which you don't get if you're just treating the miners on the blockchain as pseudo-anonymous actors in the cloud somewhere. And the other thing that we can offer is we can charge for these services in your home currency, and we can do invoicing. We can do it monthly billing. And all of these things are very flexible now, and that's very, very useful for businesses who don't necessarily want to engage with the volatility of Bitcoin, but they still want to use Bitcoin for its superior technology, the fact that it's a public blockchain ledger. So in essence, we at TAL, we are providing all the benefits of private blockchains, which is that you have a company that's going to do this, take care of the technology for you, but we're providing it on a public blockchain ledger, which gives your data and your platform and a lifespan, a life cycle that will live beyond us. So because your data is on the public blockchain, you have the option as a business to change your solution provider in the future for whatever reason. So I think that flexibility is very, very important for enterprise clients. And just as a reminder, this is another statistics slide, which I think Jimmy already mentioned earlier in his presentation. But the reason why we're building all of this on top of Bitcoin SV is because Bitcoin SV is the only public blockchain that can scale unbounded. And that's very important because we are not going to put all our efforts into building all of these platform services if the technology is going to hit some sort of scaling boundary in the future. And just more on that statistic, which is the current BSV network does something around 2,800 transactions per second. We at TAL were the ones who mined those blocks. So we know with empirical evidence in production in the mainnet that this can be done. And with all the good work that the Bitcoin SV infrastructure team is working on, we believe that we will soon hit the 500 or 50,000, transaction per second mark, which will be a very, very large milestone, because then we can say that the Bitcoin network can do Visa better than Visa. Moving on to our sort of IP strategy, We are also in the business, we're starting a burgeoning IP department where we are going to pursue research and development and on IP that is very relevant to our business. And relevant IP would be anything to do with the blockchain node or the low infrastructure level. So a couple patents we already have filed, one which is the STAS token. Up there it's called L1 token, but we're sort of kind of calling it L0 now, which will allow hopefully a generic base token layer which other companies and other implementers can use to build more business featured solutions for their clients. And the other one, which is Trinity, which is a patent which deals with the efficient generation of random numbers using a public blockchain mining network. So we think that these will have a huge future potential in terms of value because these are sort of applications that not many people have thought of yet because of the new nature of blockchain technology. Finally, I'd like to stress the importance of our partnerships, our biggest partnership being with N-Chain. We announced earlier this year a deal where we have some IP sharing arrangement, and that will give us access to a lot of the very, very relevant patents that they have. They have over 1,000 patents in blockchain, and we believe that this is going to be a very, very important and strategic relationship in order for us to be competitive. And so, and the next slide I would like to announce today is that for our MAPI platform, we have, I'd like to announce that we are going into a partnership with Unisot and MetaSV. Unisot is the sort of the blockchain provenance tracking and ERP and secure data interchange data platform. And we're very, very happy that they have, we've gone into agreement where they will be using our MAPI platform so that we would be processing their transactions for them. And the same with MetaSV. MetaSV is a middle layer, sort of a middleware or SDK that allows, it's actually being used by quite a number of applications in China right now so that developers can write their own applications which create transactions on the Bitcoin SV blockchain. Finally, I'd like to let you guys know about our efforts in building out our Zug office. We recently opened our subsidiary office in Zug, Switzerland. And this is very, very strategic move, and we believe this is very integral to for our future roadmap. And the reason Zug and the reason Switzerland is if you look in, I think recently there was an announcement from the Swiss authorities that they've modified some regulations to make the trading of digital currencies, the treatment of digital currencies for bankrupt companies and trading houses, and also the separation of regulations between digital currencies versus digital assets, which have all been clarified. And all of these will take effect as of January 2021. So we believe that Switzerland is probably going to be one of the leaders in terms of the regulatory aspect of it, in terms of how they handle digital currencies and all the companies and businesses who are doing business in this space. So we believe it's very strategic for us to have this office, which is going to be primarily focused on product development and research in Switzerland. So I'd like to leave with you with the sort of the idea that I started off this presentation with the notion that we need to break the old business models, but I want to leave with you the thought that at Tao we're very focused on building, and we're starting with building the infrastructure or the pipes, as it were, so that other companies can take what we build and actually create real value. And we believe that it's only in building real utility value for this technology, for this token, for this system we call Bitcoin. It is the only way that we can build this foreseeable, this wonderful future where a lot of folks have spoken about today, where we can finally take back ownership of our data and finally be able to open up a new chapter or a new cosm in our world. Thanks very much.
And thank you, Jerry, for that great presentation. We're looking forward to seeing more advancements from Tal, including your expansion into Switzerland. I have a schedule change to announce now. Next was supposed to be Jackson Lasky speaking from Unbounded Capital, but he's graciously agreed to speak later in the afternoon at approximately 3 p.m. Eastern Daylight Time today, so that we could accommodate the schedule of a couple of the speakers who are coming up in some of the sessions in the next couple of hours who need to stick closer to their scheduled times. So we're moving directly to one of our keynote presentations today. Today we are so full of great speakers who we appreciate being here. This will be a joint keynote presentation from two representatives of Fundstrat Global Advisors, the leading Wall Street market research firm based here in New York City. Speaking first is someone many of you will know. He is on television all the time, providing lots of commentary about the markets. He is the managing partner and head of research at Fundstrat Global Advisors, and following him is the lead for digital asset strategy at the firm, David Greider. But we'll first welcome to our stage, live from New York, the famed Tom Lee.
Hi, it's great to be speaking to all of you. I've got a few slides here. I'm going to speak for a few minutes, and what I really want to cover is why 2020 is turning out to be a good year for digital assets and crypto, but it's really setting up for 2021 to be a great year. So let's just dive into this. Now, 2020 is a year that I don't think any of us should ever expect to see again in our lifetime. I think it's almost worse than a science fiction movie because we've had a global pandemic that's killed over 1 million people so far and counting. It's the first ever time that the entire global economy essentially went through a coordinated shutdown. I mean, that's unimaginable, but can you imagine policymakers and central banks deciding things are so bad they got to shut down the entire economy and everyone stays at home? The U.S. had an economic contraction that's worse than the Great Depression. So whatever they call the Great Depression, this is a greater depression. And the Federal Reserve introduced a playbook within days. So whatever guidance they had, it completely switched to low for long forever, and even their model for changing rates has now changed. I mean, that's, again, something out of a science fiction movie. And the U.S. government spent $5 trillion in stimulus, which is about 25% of GDP. And as you know, this led to a huge panic in financial markets. So this is the setup, and I think this is the question. How did crypto do in a year that looked like something out of a science fiction movie? And the good news is crypto did actually incredibly well. Bitcoin is the best performing asset year to date. It's doing better than gold, better than treasuries. So if you said, I want a safe haven in a year that involves something out of a science fiction movie, you have to own crypto. Now, of course, Bitcoin did well, but look at this chart. Bitcoin was outperformed by many other crypto assets and blockchains, including BSV. So that's the key. In a year when you're trying to find safe havens, you want to overweight crypto, but you also want to not only invest in Bitcoin. Now, this is where it's interesting. You know, we've said for some time, in something that's quite controversial, that we think crypto tends to be a risk-on asset. In other words, in years where equity markets do well, crypto does well, and in the years where equities do poorly, crypto should do poorly. And this chart really underscores that. If you look at how the correlation of Bitcoin Core to the S&P 500, you can see in 2020, that's the dark blue line, it's actually risen to 35%, which is one of the highest correlations in many years. And again, it's just a reminder, as much as crypto has really shined in a year of crisis, it is also highly correlated to risk-on assets. Now, another good thing that's happened this year, and I think that's made this a good year, but not a great year yet, is that we've seen signs of broader mainstream acceptance of crypto. For instance, in May 2020, Paul Tudor Jones announced that he's buying Bitcoin Core as a hedge against inflation. In August, we had a public company actually invest $250 million of its reserve capital into Bitcoin Core. And in September, we've had some banks really get the nod to be able to actually hold reserves for stablecoin accounts. Okay, but these are sort of baby steps. And I think the reason 2020 is good but not great is you still need two things to happen. The first is you really need to get true mainstream adoption of crypto through the institutional channel. And crypto is too small today. It's not 10% of liquid assets. Even if you aggregate the entire market cap of all crypto, it's not even 1%. It's 0.1% of all liquid assets in the world. And this is a map. Each of these squares represents about $100 billion, and you can, or 200 billion, sorry. And as you can see, crypto collectively is just a little tiny little dot. It's smaller than gold, it's smaller than art, way smaller than equities or bonds and real estate. So I think until crypto becomes a much larger share of total assets, it's not going to be on the radar for institutions. But that's not a bad thing. Take a look at Tesla. I think it's a case study in how when an asset goes from being a retail asset to institutional, the institutional investor overnight transforms the price or the valuation of an asset. So Tesla has been dead money for 5 years, stuck at around $200. This is pre-split. And as you can see, the minute it became on the radar for Russell 1000 institutional investors, the stock went parabolic. That's the lesson. You can take anything, even a huge mature company, once it becomes an institutional asset, you'll see a huge change in price. Now, one last thing before I turn it over to David is, I think this has been a great year, but I think the industry did not capitalize on some key things. Now think about this. Just in America alone, the majority of Americans were shelter at home. Americans this year expanded their digital life. We estimate that as much as 90% of all economic growth since March has been purely digital. Even U.S. companies pivoted their business to become essentially part of your digital world. I mean, look at Nike and all these other consumer companies. They made a huge pivot this year. And I think that's something the crypto industry didn't capitalize on. This was a year where they could have tried to pivot towards a more mainstream, Americans are living a digital life, and that was a dropped opportunity. But I'm going to stop it here and turn it over to David to continue the discussion.
Thank you, Tom. Thank you, Tom, and CoinGeek. It's great to be here presenting in front of you guys today. Today, I'm going to talk about three things. The first thing I'm going to talk about is Fundstrat, what we do with our research product, and particularly within the crypto industry. The second thing I'll talk about is some of the unique things that we see with Bitcoin SV and a report that we recently did on Bitcoin SV and some of the things that we find very interesting in that. And then the third thing I want to talk about is within that report, Bitcoin SV business use cases of the blockchain. We're going to talk about some of the companies building on Bitcoin SV and what we find interesting from a sense that's a little more broad to the global economy or to the most industries, and kind of thinking about what this actually entails for changing, potentially disrupting some of the current existing business models that are out there, and what the new innovation of the technology is enabling and across a broad swath of use cases in society. So let's just kick it off with Fundstrat. Tom, you probably know Tom, what we do there. Just to give you a quick background on what we do with Fundstrat and our crypto product. I lead our digital asset research business. Consists of three things. We do research for asset-specific companies like Bitcoin SV or networks. We have institutional client base that relies on us for that research. We really try to be the bridge between Wall Street and crypto, and we think that's been very impactful and very powerful. And the third thing is we have a strong retail following who really looks to us for looking to find guidance, to find education in the space. And the report I'm going to discuss today is on Bitcoin SV here, the business use case of the Bitcoin blockchain. And we recently released this just a couple months ago. And it followed a report that we did back in February, which was on the Genesis upgrade, which you may have been following if you are in the Bitcoin ecosystem, and I'm sure you probably are if you're watching this. And we released that back in February, right before the CoinGeek conference in London. It was a great event. We were glad to be there and glad to be back. When we released that, we think it's very important to start here because that's kind of pivotal to where Bitcoin SV is today, because that's where it came from. And I think that was a really monumental turning point for the network and the technology and the way that it's being used. So just to recap, and I'm sure you folks know, but releasing the block size limit, that's key for building the ability for unbounded scalability, which you guys are pursuing now. And what I'll say about that is, from our independent research point of view, we've seen, a number of folks trying to scale and attempting to scale and doing a lot of different things. And obviously, there's trade-offs that come with every approach in the ecosystem. We look at a number of different chains and a number of different projects, and we're independent in our research. But one thing that's standing out to me thus far is that, since you guys have done that, since Bitcoin SV and the community has changed this approach to unlimited block size, you have actually come quite far relative to a number of other assets and other approaches. And you guys have a ways to go that you're actually looking to still expand in that vision, which is the far bubble, which is what I've been told Bitcoin SV is looking to go for in the future. And I think that that's very exciting. And one thing you also have been able to do, which is very important for the use cases that I'm going to discuss, is the transaction fees have remained low thus far. And we've seen that, and that's been very interesting for enabling some of these use cases. And I feel confident in saying that, and it's very interesting to me because, if I hear what a lot of networks want to do or proposing to do or planning to do, one thing I want to actually know from an independent research point of view, right, is to verify. And when I look at many networks, the thing that I see is the blockchain. I look at the blockchain data, and I view that as effectively the equivalent of company financials. And just as you would go to read a 10K or an investor report with the SEC, I want to look at the blockchain data and know that what's happening there on the network is in fact happening. And when I look at Bitcoin SV, one of the things that's very encouraging to me, based on our research, is I can look at the data and I can see that the block size cap, removing that has really actually been showing that block sizes have been rising. And this chart is in log scale, so maybe it doesn't even understates it, but it's been very material in the growth, and it's shown that the ability to grow block sizes. And what that does is, in the next slide that I'm going to talk about, is we've seen a couple of things. This far, there's two things I want to point out on this chart. The first on the left side is the transaction fees. It's been very low thus far for the most part of since you guys have launched. And I think that that's very important for enabling several use cases. And on the right side is you have seen several periods where not just transaction fees are low, but the actual average transaction value sent are low. And what that means is very useful. You can have effectively micropayments. And that's a very interesting thing, which I'll talk about in a minute, because it changes the payment dynamic and what you can do on the internet with streaming value and what you can do in terms of use cases that were previously not possible with the current payment systems and the payment rails that we have. And that ability to do streaming value opens up a lot of interesting business internet use cases that we'll discuss. So the next thing, just to point out on Bitcoin SV that I find interesting thus far, is you have seen also transaction throughput, meaning large transaction counts rising very dramatically as well, which is very encouraging for at least the use case that Bitcoin SV is looking to pursue, which is scalable transactions. And we've seen that, and that's been very encouraging. On the right side, you have data transactions on the blockchain. You can see that a lot of data transactions are as well being used. And this stuff is all very important, as I'll talk about in a minute, just to preface. So from that, one thing that I find important, as we're educating clients, we're educating investors across Wall Street, is to help them think about how cryptocurrency isn't just a currency, but it's also a platform technology for enabling a host of business use cases. And I think that sometimes gets lost with folks who maybe are newer and trying to dive into what this is, because you can look at some of these things and you can say, I can move that money, I can send money around with this, but it gets lost what businesses are doing with it. And that was the purpose of this report, was to dive into a few specific segments of the Bitcoin SV ecosystem across a couple of different industries, and kind of give people an understanding about what these people are doing and what they're enabling and what's unique about that and why. And I won't probably have time for all of them, but I'll go through a few here that I find interesting. But what I will say is, one thing I encourage all of you to do who are here watching this and online is to go to our website, fundstrat.com, and you can find this report, which is one we've made public for the crypto community, because we want to help broaden that exposure. And I highly encourage you to check that out, read about all the other companies in here, go to their websites, learn more, watch their presentations here, because they're going to give great discussions, I'm sure, like the one we just saw previously. And I encourage you to look at that and follow us in our research. So just of the ones we're going to discuss, this is just a host of a number that are on the Bitcoin SV blockchain. I'm sure there's many more emerging, as you'll see here today and as time grows, and that's very exciting. So one of the first ones I want to discuss is a company that maybe is presenting here called EHR Data. What's interesting about EHR Data is, they're using the blockchain to enable reduce fraud and to give people ownership of their medical records data. And one thing that's unique about that is it has a very interesting impact on the healthcare industry, but more broadly, I actually want to talk about what this kind of means in terms of just the enablement of this data, letting consumers take back their data, and what that means for society more broadly in terms of a number of industries. So if you think about the paradigm of the internet today, generally speaking, consumers host their data, and many of the biggest technology companies, as people have, are taking that data, and it's become a very big business. And if you have a new model emerge, right, not just across healthcare, but across many swaths of the internet society, where consumers take back control of their data and own their data, it creates a different business model paradigm shift. And what I'm talking about here specifically is if you think about advertising, for example, digital advertising, Google, Facebook, this is really supposed to be, $500 billion market across the U.S. and globally, I'm sorry, within the next few years. And it's a very big market. And if you shift the balance on this from, businesses extracting data from consumers to and getting advertising from it to consumers owning their data, selling that data back to businesses for an amount, you have a really different business model shift that can do a lot of different things to society across the internet. And I think some of the technologies that are built upon the core of this blockchain here, Bitcoin SV, is useful for really being uniquely able to enable that. And I'm just going to skip through a couple of these here. Just to touch on a couple things for each one. MetaStream, this is interesting because IoT, they're putting a number of data sources on the blockchain. And what this is useful for is tracking, big data, right? Connecting the physical world and the digital world. And IoT is going to be an $11 trillion market, a very big market. And, what I found interesting about Bitcoin SV, unique in this situation, the way you're approaching it is, with the scalability of putting the data on the blockchain, this is something you can't do with probably many other networks unless you're, especially in the public sphere, but you can do in many private enterprise chains. But your scalability allows for large amounts of data to go on that chain. And that's interesting for connecting the physical and digital world. Another one here is BitBoss. They're doing very interesting things to, again, our economy is going digital. You're seeing digital transformation across the entire economy, and especially during COVID. And what they have is they're connecting casinos, the digital side, and they're allowing people to use Bitcoin SV tokens. They're allowing for payments. They have an integrated app. It's built into the blockchain. Very, very interesting, and it's allowed because of some of the more high transaction throughputs, which I find interesting. Another one here, coronavirus. Gaming is a huge industry, as we've seen. It's a very big thing, and as more people move away from sports to esports, to move to online games, you've seen a large growth in that market, very big market. And one thing that's come to us is, we have a lot of companies who are in charge of these games, these matches, and finding transparency in who wins these games, who loses. It's a big deal, especially when you have sports tournaments and there's millions of dollars on the line. And making sure that you have an audible truth on that that's not controlled by one company is very interesting because even if you have a consortium of these companies, how much trust do you have in the system? And what they do by putting some of the games online, putting some of the moves online, I think that's very interesting, and I think might be something that gamers demand in the future. Marathon browser. So one of the unique things that the Genesis upgrade and the shift towards the MetaNet has focused on is transforming Bitcoin SV from being more of a digital payments engine to also enabling another layer of internet applications. And I think that's something that's possibly lost on many people who look at cryptocurrency and think about crypto as just this payment tool. And I think what's unique is, as I'll talk about in a second, many projects, crypto projects, are looking to reinvent the internet. And you guys are doing it in your own very unique way. And what we're seeing when you store a distributed architecture of nodes across the world, and you have big data held right from websites, from things, whether it's different websites, whether it's different media files across a broad swath of this new internet architecture, right? Taking it out of centralized cloud providers, putting it on a blockchain architecture, and then you overlay another layer of network on top of that, and then you have effectively the portal to access that. And you can create this different internet architecture that's not housed by Tencent, Alibaba, Google, Google Cloud, AWS, and you can actually change the dynamic of that. Possibly in the future, that could be something very interesting. We're looking to see how that unfolds, what that could mean for the cloud industry, which is already a $400 billion industry and growing very fast. So we think that that's interesting. And back to the advertising model, another interesting advertising thing that we're seeing is if you think about internet business models today, Generally speaking, there's really two types of business models that exist. There's advertising, and there's subscription transaction. And if you think about what a new type of technology can do to potentially change the business landscape on these is, we've just talked about what could happen with changing advertising to data ownership and how that could kind of cut through to giving consumers back value, right, instead of paying through the advertisers, the middleman. Another model that we see today is this one, Tonic Pal. It's giving people the ability to do advertising to their friends, but with micropayments. And what this is interesting because if you look at instead of giving people subscription models, you can take it to a more minute detail. It's an unbundling. People probably remember the unbundling of the cable networks when internet came online, right? You would buy Hulu, you change, these things change. And we could potentially be seeing an unbundling of many subscription models with just the technology of streaming micropayments and what that could enable, as well as a change, again, back from advertisers taking our data and, pushing products on us, right, that we may or may not want, but also to this new model of we have our data, we get paid for that data, people pay us to look at these things, to look at different campaigns, and it's a very unique structure for how the internet could evolve, and I'm watching it very closely to see what happens with this and what new business models are invented. And another one that we'll talk about quickly is an API service. Because you can have smart contracts, because you can do streaming micropayments, APIs are a very big industry. If you look at much of some of the very billion-dollar companies today have really just become built on APIs. Twilio, other ones like Plaid, you're seeing an unbundling of the internet stacks and a lot of these internet services that exist. And you're getting really specialization in these companies where companies are just doing APIs and providing those APIs as a service to other companies, and you're building these layers. And this is very unique because it allows you to monetize that API as a developer with streaming micropayments every time someone does a call. And I think that that's very unique for what this could enable in terms of a layer of the internet stack and what different business applications could be built. And in my industry, finance, we've all know that there's been a big push towards really quantitative investment. And I think something unique here that I'm seeing as we think about what could happen with many assets on many blockchains and even beyond just financial assets, right? If you tokenize things, if you tokenize different parts of society, right, you can take big data, you can do different analysis on that, right, across a number of different asset classes, and you can create a lot of efficiencies, and that could be useful for the capital markets. And I think that could be very interesting to see how that unfolds as well. In-chain, obviously the company behind BSV in terms of the many of the development initiatives that happen. You can see here the things that I'm talking about really span across a broad swath of industries, and they help people incorporate that. And I'm looking forward to seeing what types of new internet and innovative crypto blockchain solutions come out of this across a number of industries. And one last thing I want to leave you all with is a speaker who just spoke, Tal. But I find it very interesting because people think about them probably potentially as just a mining company. And as they just talked about, I think it's much more than that the potential could be in the future for many of the crypto networks that we see existing, but BSV in particular as well, which is many of these internet architectures, you can look at these things, and especially the companies that support it in the infrastructure side, almost as a reinventing again of the cloud. And the cloud computing, it's been a very big shift that we've seen these days. And people thought the cloud, people think the cloud will never end. But I think at some point, we could see a change in that dynamic, and you could see a change towards many of these computing architectures that we're building today. And it's just beyond, it's more than just mining, right? It's a reinventing of how many business models could potentially change in the future. And that's something that we're keeping a very close eye on and we're very excited about. And with that, I thank you guys for your time.